Hey, let me ask you something. What if the government suddenly decided that your bank deposits weren't guaranteed anymore? What if, overnight, the system that's been protecting people's money for nearly a century just disappeared? Most people don't think much about the FDIC, but it's one of the most important safety nets in the U.S. financial system. It's the reason you can put money in a bank and not worry about losing it, even if the bank fails. And now, there are reports that Trump and his team have been considering cutting, restructuring, or even getting rid of the FDIC altogether. So what does that mean for you? What would happen if the FDIC disappeared? And should you be worried about your money? That's exactly what we're talking about today. So stick around, because this is something that could affect every single person with a bank account. Now, first things first, let's talk about what the FDIC actually does. A lot of people don't even know what those four letters stand for. It's the Federal Deposit Insurance Corporation, and it's been around since the Great Depression. Back then, banks were failing left and right, and people were losing all their money. Imagine working your whole life, putting your savings in a bank, and then one day, that bank just shuts its doors and says, "Sorry, we don't have your money anymore." That's exactly what was happening, and it led to widespread panic, bank runs, and financial disaster. To stop that from happening, the FDIC was created. Its job is simple. If your bank goes under, the FDIC steps in and makes sure you still get your money, up to $250,000 per account. This has given people confidence in the banking system for nearly 100 years. You don't have to wonder if your bank is going to collapse tomorrow. You don't have to rush to pull out all your cash if you hear bad news. That's what keeps everything running smoothly. Now, here's where things get interesting. There have been reports that Trump's administration has looked at cutting the FDIC's power, rolling it into the Treasury Department, or even abolishing it altogether. Some of his advisors have floated the idea that private banks could take over deposit insurance instead of the government. That might sound fine on paper, but here's the problem. If private banks were in charge of insuring deposits, they'd be looking at it like a business. And businesses don't like to take risks that don't make them money. Right now, the FDIC protects everyone equally. Whether you have $100 in the bank or $100,000, your money is insured. But if the system gets privatized, who's to say banks won't start charging for deposit insurance? Or worse, deny it to people they see as risky? That could mean fewer protections for everyday people, especially those with lower incomes. And then there's the issue of bank failures. Banks fail more often than people realize. Just last year, we saw some major ones collapse, like Silicon Valley Bank. When that happened, the FDIC stepped in and made sure people didn't lose everything. But if the FDIC were weakened or eliminated, what happens the next time a bank goes under? Will people get their money back? Or will they just be out of luck? Another concern is what this means for financial stability. One of the biggest reasons the U.S. hasn't had a full-scale banking panic in modern times is because people trust that their money is safe. But if the FDIC disappears or is severely weakened, that trust goes away. And when people don't trust banks, they start pulling out their cash. When enough people do that, banks collapse. And when banks collapse, the economy crashes. And it's not just speculation. This has happened before. Before the FDIC was created, bank runs were common. People would hear rumors that a bank was in trouble. They'd rush to pull out all their money, and that panic would cause the bank to actually fail. It was a vicious cycle. Without strong deposit insurance, history could repeat itself. So, why would anyone want to get rid of the FDIC? Well, one argument is that it costs money to maintain. The thing is, though, the FDIC isn't funded by taxpayers. It's funded by fees that banks pay. Cutting the FDIC wouldn't actually save the government money, but it would save banks from paying those fees. And guess who benefits from that? Big financial institutions. There's also talk about streamlining financial regulation. Some people think the FDIC and other regulators are too complicated and want to merge them into one agency. But in practice, that could mean less oversight and fewer protections for regular people. So what does all of this mean for you? Right now, your deposits are still protected. The FDIC is still in place. But if you're someone who relies on the banking system, and let's be real, that's most of us, you should be paying attention. Changes to deposit insurance affect everyone, especially those with small or medium-sized savings. If the FDIC ever were to be eliminated, the safest thing you could do would be to spread your money across multiple banks to stay within the insured limits of whatever system replaces it. But ideally, that's not a problem we should have to face in the first place. At the end of the day, this isn't just some government agency issue that only affects Wall Street. This is about making sure that when you put your money in the bank, it's there when you need it. And if that protection goes away, the people who will feel it the most aren't the rich or the big corporations. It's everyday Americans. So, if you found this helpful, make sure to stay informed and keep an eye on what's happening with your money. It's your financial future, and you deserve to know the truth about what's at stake.